All right. Hello, everyone. All right. For those of you that are already here, can you hear me talk? Let me know. I'm good. I'm good. Okay. Welcome to June 4th, 2019, Trade Findings and Adjustments. I'm your presenter today, Keith Bybee. Thanks for joining me. Those of you who stopped by last night, apologize for not having much for you. Kevin kind of threw that one on and thought he was going to be able to be there, so he apologizes that he had to send out a recording instead. But hopefully you were able to get onto the blog and My Hurley Investments and check out his commentary for yesterday for the market commentary. So I have a few ideas for trades. I also have some thoughts on some technicals on our markets from yesterday and how they've changed today. But if you want to start out with some questions and anything that has been nagging at you right at the beginning, go ahead and shoot off some questions for me. Anything that you had questions about from Kevin's recorded webinar or what have you. I'm not seeing anything come in, so that makes me assume you guys are ready to go and start talking. So, ideas for today. I want to look at just our indexes and how well they bounced back above our 200-day moving averages. My thought, and what I had mentioned for those of you who were on last night with a quick technical commentary I made, I mentioned how if you're going to be putting on protective trades or what have you, my recommendation was to look for a bounce. Back up here to test our 200-day. Well, that's still kind of true, but you know what? We kind of got a really nice bounce. And not only was it back above the 200, but price support level that I see right here at about 2750 for the S&P. That's not to say that we can't continue to test the 200-day or trade in and around it with kind of our summer where we're expecting not too much to happen until we, as in not too much on the positive side of things to happen until we really get something change in our trade issues with China and earnings mid-July. So aside from technicals, what changed from today that was different from the night before on Monday night? China did come back and say, you know, we would like to just have a good, they kind of hinted at more of a good private discussion on these trade matters, and what sounded positive and not necessarily anything concrete, not necessarily totally unconcrete, just really more China walking back a little bit their comments of more nationalistic comments and, trying to rally their own citizens around their cause and kind of more on the side of, yeah, we're still looking to make things work and we'd like to have a mutually beneficial discussion. So that was one of the things that kind of sent things back above the 200-day. But another positive thing is on our FANGs in particular, there's a lot more volume to push things back up and give us a little support, which means there is a better sign than we've gotten before as things have come back down from the highs, that there's institutions still wanting to keep things supported, our indexes, our stocks. Let me just look at one of the next index. There's one that fell 1.5% was our NASDAQ yesterday because of antitrust. So now we're not back above our 200-day right at it though. More importantly, I could have mentioned with our S&P how we have Williams percent R, a good bounce back up to this top and a good bounce up here, which was kind of what we were looking for. On the NASDAQ, it's still going to have to get above our 200-day to really, I guess, make things more comfortable. But on the other hand, we still have a price support right here. This is around the 7,300. That's exactly where it bounced up here from Monday. Moving on to the Dow. Oops. Dow couldn't get above our 200-day. So we have the S&P that is holding its 200-day and the Dow and the NASDAQ that are coming back up to test it. But either case, or in all of those cases, it is a good sign to see it come back up. And it is a good sign to see our technicals on our RSI bounce. So are there any questions so far on our indexes? I guess I kind of lied. I said that we're back above our 200 on our indexes, but I meant our most important index, the S&P. So, putting this part on hold, we'll come back to some thoughts on this and moving to what I think might be a good trade. Facebook. So if you've followed along with some of or all of Kevin's trades, there's been long calls, leap long calls on Facebook that we've been managing, and pullbacks that we've been dollar cost averaging. But just looking at some of the technical stuff today, what I really like to see is this big bar of volume today supporting this 200-day moving average right at 161. Both today and yesterday had stopped right on it, pretty much to the penny, to have a nice bounce today, and big volume showing that there's some big money supporting the move, supporting the level of support. We also have all the way through here around 160 price level. So my thought is, because we had such a silly sell-off on Monday and even Friday, broke our 50-day Friday, holding this today, 200 today, excuse me. I feel like it could be a decent opportunity to play that support level back up to a resistance level on our 50-day. So now there's a couple ways to do it. If you've already been doing Facebook long calls and you've already added positions where you're dollar cost averaging to lower your overall cost, you can certainly justify adding on more positions to continue to lower your cost basis. If you're going to stick with that, the leap long calls and go out in time. The other thought, though, was if we're just playing a support and resistance level and the sell-off on Monday just seemed ridiculous enough, I kind of feel like we can do a bull call. If you haven't done any of the Facebook calls as a new trade, or if you've gotten out of those Facebook calls or what have you, let's just take a look at some of the options. So Monday, Facebook was kind of hit the hardest with news that the Department of Justice is looking to investigate for possible antitrust issues with our big tech firms, our FANGs, and apparently Google is one of the ones which is most to blame. But as far as stocks that got hurt the most from just the news, it was Facebook. So that's kind of why I'm going down this logical route. So for a bull call, for a shorter term bounce, I'm looking at probably going I'm going to look at July and September, but we'll likely might need to go further out. Let's just see what we've got. July. And it's not even giving me any of the prices for whatever reason. Bid masks. July, about $1.40 for 185. I think if we came to 180s anywhere, we'd probably be on the cheaper side. Let's see. And it's not giving me any of the pricing, which is frustrating. And I'm looking at puts too. Let's see if we can get it to come up. Come on, load. Weird. It's not wanting to load our option prices. Well, that doesn't help us, guys. Let's see if I tried December, if it would actually show us. All right, sorry about that. My 3-year-old wanted to give me a hug, apparently. So let's just do the math off of our last numbers. On a 180 out to September, seems a little expensive. If we went out to 190 and a 200, you can see the prices. I don't know if you can see these very well, guys, but a 190 September long call at $4.10. We also have a 200 strike at $2.26 as our hedging option. That gives us a $10 upside. And we're not necessarily looking at it really going in the money way up at 190, although certainly could. I'm just really looking to see the stock come back up and test that 180 level and then get out. So obviously you could go to 180 and do a 180, 190. You would have $7 minus a $4 190 strike. That would probably give you a better risk to reward ratio. But I wish it would show us the actual numbers because it's not going to show us our snapshot analysis with any useful information. So well, let's just write down some numbers and then we'll go from there. All right, so our ideas for today: Facebook full call. And it's not that you couldn't do this if you've already done long calls on Facebook. It's just that you'd have to make sure that you're not getting yourself too over leveraged in that one type of position. So first I'm going to look at 180 strike, call, 190 strike, short call. So our 180s were at 710. Of course, this all changes tomorrow, but what you're going to want to look at is, of course, holding the 200-day to see if it comes back in test, or even Wednesday to see if it comes back in tests at 200. 710, short call at 190. We decided was 410. Risk or cost. $3 even with a 180 to 190 of $10 we could possibly make. That is not a bad risk to reward. Obviously, our real risk is not having enough time out to September, but I think that gets us through, let me double check, but I think that gets us through an earnings and possibly a pre-earnings run that you could even get out of beforehand. So July 24th estimated. But again, really just looking at a bounce from here to test 180 again, and if it doesn't, it's going to go down to probably here at 150. In which case, you can close your short positions and roll it down to bearing at 190, roll it down to 185 or what have you. The real risk is time in the trade. Our hedge is our short option. So, all right. So just looking at the numbers for the 190-200, you could do, it was a $4 debit minus a $2.50 credit, but this gives us, is more expensive, but it does give us a little better risk to reward. Give me a second, guys. My poor 3-year-old is trying to entertain himself while I talk to you guys, and the wife is out of town. Give me just a second. All right, I'm back. Sorry about that. Expiration date. Thank you, Ida. These were September. I believe. That gets us for a pre-earnings run, as well as this one right here, 710, 180 to 190, 410. You could even go 185. Obviously, that's risking less, but if you wanted to be more conservative, or if you already have some of the long call position, leap long call positions, and you're just kind of looking to see if we get a bounce, kind of like we were talking about, and over the shorter term period, that's an option as well. But I'll leave that one up to you. I like the 180, 190 risk to reward. Any questions, guys? I do think, obviously, it does help to get more time, but again, this is, if there was a November one, I would look more at that. There was only a December expiration in addition to the September, so September seemed more reasonable. So the other option would be to go higher up and strike, and that was 190, 200, 410, and 226. It's the 216. And again, with both of those, we're just looking to see if it bounces and to get out fairly quick on a bounce on that moving average to test the 50-day moving average. So any amount of profit you could get in that bounce, I would say to close that out and be happy with it. Ida asks, reason for the strikes being so much out of the money of today's market price? Just because they're cheaper. That's really it. You could go down, what, 170, 180. You'd make up money quicker. But you'd be spending a little more money. So that's something that you personally kind of have to decide there. It'd be about $4. But again, you'd make, as it goes up, you'd make it back quicker. But I'll leave that one for you, Ida, to decide. I was just looking at possibly a $2 or $3 debit spread. So that's why I went up in strike price. Any other questions on this one? The other thought I had, going back to our indexes, was if you have a majority of your trades, that you're on right now are bullish, and you feel like you need to have a little more protection across your portfolio, let me go back to let's go to the Qs, QQQ. So the Q follows the NASDAQ, and it did get nicely back above the 200-day. Obviously, when we looked at the CompQ on our NASDAQ index, it doesn't necessarily follow it exactly, but this is what people trade, so it's important, I guess, as well to look at these. This is the ETF, obviously, that follows the NASDAQ. It's important to look at those as well. So my thought was, well, if we need a bit of overall portfolio protection, we have support right there, but we're really looking at, in case we get more summer doldrums and just volatility coming through, news this and news that, great news one day, terrible news the next day. It's just an idea for if you feel like you have plenty of bullish trades and you feel like you need to have a little bit of a hedge to the downside. What I'm thinking is a bear put on the Q ETF. Why the Q? Because the tech industry, which is the NASDAQ is full of is gotten hammered the most and kind of moves quicker, and it's a little cheaper on occasion compared to S&P or a SPY that follows the S&P, SPY. So again, let's see, we even have a September 30th, but I kind of feel like sticking with September right now. That still gives us plenty of time for summer. And just giving ourselves a little bit of downside protection. So let's see, 175. Sorry, I'm looking at the calls for a second. We're going to go back over here to the puts. But our 174 is right at the money. I guess you could say 175 is pretty much right at the money too, but or at least closer to the money. Let's see. So a possible $174 and $165 is what I'm looking at. So let's see, 174 is 720, 165 is 416. September. I'll put in a September short. So difference between those, we're looking at $3.04. Again, trying to stick around that $3 range, but getting us pretty much right at the money. I think we decided that was 174 strike and 165 on the short side. We'll check 165, 416, 174, 720. So there you go. You're spending $3 to have $9 of protection to the downside on the Qs, which getting down to possibly a 165 if it doesn't hold our 200-day. This is something that just gives you a little bit of protection. As far as number of contracts, again, that's going to be not knowing your specific accounts. It's just going to be a call on your end as to how much protection you want. And again, if it continues to hold that 200-day and it shoots up quick, you can close that 165 short put and even roll it. Plenty of room to roll it up if you need to. but that is going to be depending on positive news and good things, good tweets from Trump on trade and anything of that nature that is going to push our market back up, or earnings mid-July. So that's what I thought. Again, it's your call as to how much or what kind of protection you may need, but this was a good one. I thought if you have plenty of bullish trades to give you a level of protection. Any questions on this one? I'm also just going to point out, if you haven't gotten into leap long call positions on Facebook, and that's something that you haven't followed, our June expiration 2020 calls that we've been working with, Kevin has on his account 210s, but you can also go down and strike at 200s, and we're looking at 1065 to go out a year at a pretty good price. Pretty decent, and I would say much of the pullback on Facebook outside of Monday when we heard of antitrust stuff is really just profit taking. After last summer when they fell ridiculously on barely missing their revenue numbers and everyone getting scared of regulatory concerns, which of course is still part of everyone's concerns. They've had two great earnings since then that have pushed it back up pretty quick, back up to 200. You can see back here, this was their earnings day. You can see this gap where it went from 185 all the way back to hitting 200 on overnight and opening down at 192 and kind of trying to test 200 before it really just kind of phased out. Why did it do that? I think a lot of people, again, having lost out from last summer of it coming all the way down 130, 125 even, I think a lot of people were happy. A lot of investors, probably retail investors, were happy to get out at a breakish, not a word, happy to get out at a close to break even around 200 for people that had gotten in there, or profit taking for people who decided to really get in at a cheap valuation from the start of the year and take some profit on a huge winner on coming from 125 all the way up to 200. I think that is our biggest reason, but fundamentally and going forward, I think Facebook has shown that they can deal with a lot of the regulatory issues if they need to. They're spending a lot of money on privacy, which was part of the concerns, and they've kind of just gotten beat up from both sides of the aisle politically for various reasons. Anyways, I won't continue to ramble on that. I'm sure you've heard us talk about it plenty as it is. But guys, is there any other questions before I sign off? Doesn't have to be about this. It can be about anything. if you want to make sure and take a screenshot or just use your phone and look at those, take a picture of those ideas, go for it. I'm not going to be able to get this onto the My Hurley Investments blog because I don't have access for that to do it for Kevin. If I had remembered, I would have asked him about that. But just to make sure you have what I was looking at, if you can take a screenshot, take a picture, whatever you need to do, you have the time to do that. And again, what I would be looking at is tomorrow seeing if we're testing that 200-day on Facebook again, or if we're following up with decent volume that's continuing to push it up. Scoot this over so you still have it. Seeing where it's at, even if it opens up a little higher, just keep an eye on it. Look at it tomorrow. See if we have volume here to support going up further, or if we are going back to test the 200 at some point. All right, guys, if there's no other questions or thoughts, I think that's it for me. There's a 3-year-old that has been begging to play, and I'm going to go play some soccer or something. So thanks for joining me. I'll be here Thursday as well at our morning trade findings, and I hope to see you there as well. Talk to you guys later. Thanks.